Oh my gatos. Meow. It's grim out there. It started with growth stocks, and now it seems like most stocks have been destroyed. Just when it seems the damage is done and the smoke should start to clear, the market finds a way to inflict even more damage. It's been psychologically painful to watch this happen day after day, week after week. I mean, it feels terrible. I know it's bad when I can't even bring myself to look at my personal capital account and see how my investments have fallen in value. And as for individual stocks, I've been picking up pennies in front of these steamrollers, and I got steamrolled. My faith has been shaken forever in individual stocks. I mean, these things have been destroyed on earnings when they report, even good earnings. And it's not just growth companies with no profits. Even the mouse got hammered. These market corrections, bear markets, crashes, whatever this turns out to be, they always feel different. This time is different, is what you might tell yourself. Whether it's a pandemic, inflation, or rising rates, whatever it is. And this one feels different too. And it's been a consistent, smooth ride down to hell. As I record this, the market is down even more. It's depressing, and no one knows when it will end. The only thing I know for sure is that it will end. At some point, the clouds will part, the sun will return, the market will scream higher, and even hold on to its bullish rallies. Someday. We can't change what the market does, or when it does it, but perhaps we can change our mindset and approach. So here's some perspective for when the market is tanking. This is a simple thought technology that I found useful, especially lately. One thing we can do is accumulate high-quality shares at lower and lower prices. So instead of focusing on the redness of your portfolio or that shrinking net lick number, I suggest that we focus instead on a number that we can watch increase even as the market goes lower. It's a number we can cheer on as it increases. You see, our monkey brain likes to see numbers go up. It's as simple as that. It creates a sense of well-being. So the trick is this, counting shares instead of the dollar amount. You see, as I said before, we have no idea how long this could go on for or when the market will turn around, but it will turn around. When it does, you want as many shares of your favorite stock or stocks as possible. So focus on that, is my advice. This works no matter your strategy or investing situation. There's always the silver lining, that is, if you truly believe in a specific asset. Now for me, that asset that I truly believe in is the total US stock market, or the S&P 500 as a very close approximation. So in my portfolio, I've been focusing on accumulating as many shares in this core position as possible. And the great thing is that as the value of the S&P 500, let's say, as the value of the S&P 500 goes down, it's easier for me to accumulate these shares. I can accumulate them at a cheaper price. And so how do we accumulate these shares? Well, if we're investing in a 401k and we're doing our regular contributions, it's already happening. You're making a regular contribution and you're picking up more of those shares that you want anyway. You're picking them up at a lower price, and that's great. What if your stocks or index funds throw off dividends? Well, you can reinvest those dividends and pick up shares or even fractions of shares at a lower cost. And that, again, is a positive thing. It's building your core position. What if you're doing a more fancy strategy like with options such as covered calls or cash secured puts? It works there too because they're going to generate some cash and you can put that cash immediately to work by buying more of your core position for cheaper. You might even consider option strategies. I think now would be a great time to do some covered calls. I mean, market goes down, you'll see a little green on that covered call. You could close it out for a profit, capture that cash, and then turn around and invest it back into your core position. So this works, maybe you're not invested in a US stock fund, index fund or something. Maybe you are truly 100% committed to a specific individual stock. I won't hold that against you. Let's say, everyone's favorite example, Apple. You truly believe in Apple and you really want to focus on accumulating as many shares of Apple as you can. And with that true conviction comes this attitude that if Apple goes down, that's actually a good thing, at least in the short term, because you get to pick up more shares of Apple at a lower price. It just works in your favor. And again, it's something to focus on, not on the price of Apple going down and your net liquidation value going down or your net worth going down and your asset values going down, but more, you're picking up more and more shares of Apple. And in the long run, because you truly believe in Apple, this is going to work out great. When the market does recover, when Apple recovers, your portfolio is going to explode in value because you've picked up these shares at a lower cost. A lot of people when the market's going down, I think, try to just accumulate as much cash as possible to deploy at some time. What makes this difficult is you don't know what that time is. The market could, on a dime or on some morning, just skyrocket higher and you're not all in, right? You've got this cash on the sidelines and then you're kind of chasing after it. If you're in an investment, what I'm calling a core position, you're going to be in it for many years, decades, whatever it is. Something like what's happening here in first few months of 2022 is just going to be a blip on the radar. And future you will be really glad that you picked up as many shares as you could at these low prices. So that's the special thought technology I have. That's a way to cope with this bear market, correction, crash, whatever it is. It's a way to handle it psychologically by focusing on a number that you can work to make increase and not focusing on the number that is decreasing. All right, that's what I have for you today. Remember to subscribe to my channel for more content like this on saving, investing, early retirement, topics like that. Thanks for watching.